Good afternoon, ABR-MarketWatch viewers. Let's dive into today's market happenings. Broadcom soared to new heights, outperforming the S&P 500 with a $10 billion AI order from an unnamed client, widely speculated to be OpenAI. Despite fluctuating semiconductor stocks, Broadcom's dominance in AI application-specific integrated circuits keeps it climbing. Meanwhile, global markets opened optimistically, with traders anticipating potential faster interest rate cuts from the Federal Reserve based on upcoming inflation and employment data. However, recent financial bubbles are less frequent than portrayed, posing mixed consequences for investors. In other news, lumber prices signal trouble for the U.S. economy due to tariff uncertainties and a construction slowdown. Yet, Japan markets surged after their prime minister's exit, pushing the benchmark to record levels. German industrial production increased despite a continued drop in exports to the U.S., demonstrating resilience amid tariffs. The healthcare sector is helping sustain a stalling labor market, but potential Medicaid cuts could jeopardize health services. Intriguingly, Strategy, a large Bitcoin holder, was not included in the recent S&P 500 additions due to its lack of traditional operating revenue and profits, making it appear more like an ETF or closed-end fund. Despite meeting other admission criteria, its inclusion is contingent on Bitcoin prices due to its significant holdings of the cryptocurrency. U.S. stocks rose today as investors anticipate this week's key economic figures, including the Labor Department's employment revisions, August inflation data, and potential sanctions on Russian oil. In trading news, Verizon weighed down the Dow, while AT&T and T-Mobile stocks also fell following EchoStar's $17 billion deal with SpaceX. Oil prices initially surged due to possible new sanctions on Russian oil but later retraced their steps. The yen weakened due to Japan's prime minister's resignation, boosting Japanese stocks, while bond yields overseas generally decreased as investors expect faster Fed cuts despite local debt concerns. As we continue to monitor these developments, remember that the market is a dynamic entity, constantly evolving in response to global events and economic indicators. Stay tuned for more updates in this developing story.